What is going on, guys? Good evening. It's your favorite mortgage lender, Abdel Kwame, Got Mortgages. We are going to dive right into our market update for the week. Not too much happening this past week, but we're going to go right through it. And then again, the infamous Fed meeting is going to be happening this month. I do not expect the Fed to cut on their federal funds rate, but there's obviously a lot of talks of maybe potentially us seeing a cut on really September, but we'll see, right? Diving right into it, again, closing on existing home sales declined by 2.7% in June compared to March, again, which was more or less expected. As a larger dip, 0.7% economists had expected, slowest pace since last September. Obviously, just so many different variables involved when it comes to interest rates remaining a little sticky, a little bit of quote-unquote fear when it came to tariffs, which really hasn't impacted inflation as of yet. The Fed is closely monitoring that. Now, we are seeing new initial jobless claims just dropped to 217, but the real crazy part is continuing claims, meaning after you've been let go, is still close to 1.955 million. Again, showing a little bit of a huge strain on the market when we talk about people having a hard time finding a job after they have been let go. Mortgage bonds once again ended last week, super small range, right? Only 25-day moving average, supporting the 100-day. Again, 10-year treasury still remaining tight, which we'll take a look at rates in a few. Home sales once again staying sluggish, right? Existing home sales dropped by 2.7, like we just said earlier. New home sales, of course, going up slightly, showing that same difference as well. Now, a couple different things for us to take a look at. Also, when we take a look at housing and job market, obviously a lot of mixed data that we saw in June. We'll start seeing maybe a little bit of updates later again this week when we start seeing some changes when we look at retail sales and we look at where the Fed is going to be looking at, right? Now, I want to dive in very quickly when we talk about this even further. Again, where existing home sales dropped to 3.39 million, almost 4 million. Again, a little bit of a dip. Median home price at 435. It's about right. That's usually actually where we're generally at too here in Jersey and our branches. New contracts again rose slightly in June, up 0.6% in May. Once again, still showing a little bit of a slowdown, down 6.6% from last year. Median home price again dropping to 401,800. And then if you continue driving in here, like we talked about, unemployment claims jumping to 1.955 million people who are having a hard time finding a job after they have been let go, one of the highest levels since late 2021. Again, fewer people filing claims. Again, many obviously who lost their jobs are pretty much still unemployed. So not a lot of differences for us to be able to, look at. And then, like I said, this week we're going to get a couple big things, right? We have got the appreciation number. It's going to come out tomorrow. Pending home sales on Wednesday. And then, of course, we'll get updates on the GDP report, gross domestic product, Wednesday, with, of course, the Fed PCE report coming out on Thursday. And then again, Fed meeting results on Wednesday. So jam-packed week that we're going to start seeing a lot of different potential impacts to the market. Now, if we want to kind of take a look at where interest rates are at, let's dive right into it. You could tell we've been pretty relatively flat. I mean, literally today, the market didn't even move. But if we truly take a look at how we've been kind of battling, I would say, this ceiling since that time frame, pretty much saying really flat. So I would say probably around like April, end of April, we've been relatively at that 6.8% mark. Some weeks going up. At one point, it did dip just below that, where we were actually able for a few of our clients to get them locked in right under that. But as you guys can see here right now, for a conventional rate, we're looking at roughly about a 6.8%, which again, as you can see for the past week, has been relatively there. So a lot of different data points. Again, the most important thing that I think we have is for us to take a look at what are consumers going to be expecting when it comes to interest rates. Is the Federal Reserve going to potentially cut? Of course, we saw that over the weekend. President Trump came out and they made an agreement on some of the tariffs at 15% set throughout. Could that potentially also maybe start seeing a little bit of laxness from the market? Time will tell. Again, big week this week. We'll get the PCE report also coming out, and then we'll take it from there. Appreciate you guys jumping on. As always, if you guys have any questions, make sure you visit our website, gotmortgages.com. Thank you.